Uh-oh, guys, we have a lot of companies to break down, 7 in particular, all of which reported earnings, so let's just dive right into the video. If y'all find value, hit the like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo using that link down below. Once you guys open up an account, you get 1 free share of stock right off the bat. If you deposit at least $100, you get 4 more stocks, totaling 5 stocks, and if you deposit at least $1,000, guys, you get 10 more stocks, totaling 15 free stocks. So again, if you want some free money and you want to help out the channel, use that Moomoo link down below. And now, cheers, guys. Let's dive right into the video. So again, we had a lot of companies report earnings today, so we have a lot of charts to break down and a lot of numbers to look at. And actually, guys, I've not even looked at these companies yet because when I make these videos after the bell, I kind of like keeping it a surprise for me and for the sake of the video. So let's just dive into it. We had a lot of companies report. Well, actually, the ones that reported in the morning, I kind of already peeked at their earnings, but the ones after the bell, I did not look at yet. So let's start off with those. We have AMD to kick off the video, guys. Advanced Micro Devices, ticker symbol again, like I said, AMD. They reported earnings, and oh my goodness, look at that. Their stock is down about $6 here after the bell. Let's see, it closed at around 89, almost 90 bucks pretty much, and it went down all the way to $83.90. That's a drop of 7% roughly. Now it's rebounding a little bit, but still, it is down about 6.5%, 7% here after the bell. And actually, when the numbers came out initially, this stock shot to $92, so that makes it even worse. The drop from 92 to 83.90 is probably more like 10%, right? Yeah, about 9%. So let's see what AMD ended up doing, guys. Give me a second. So it looks like they did EPS of, let me see here, 60 cents versus the 56-cent estimate. Okay, they beat on that, and it looks like they beat on sales as well. 5.35 billion versus 5.30 billion estimated. So they beat on EPS and they beat on sales. And let me see here, guidance looks like they see Q2 revenue of 5 billion to 5.6 billion versus 5.9, or rather 5.49 billion estimated. So Q2 revenue guidance is on the upper end of the range, is above the estimate, but it looks like here the lower end of the range is way under the estimate. Again, they're guiding for Q2 revenue of 5 to 5.6 billion, where the estimate is 5.49 billion estimated. So that right off the bat could be one of the reasons why the stock is falling. Let me see here. Anything else? Yeah, that's got to be the reason why, guys. Of course, this is a growth company, and growth companies, well, they like to see guidance showing growth and guidance above the estimate, which in this case, it's, well, the upper end of the range is above, but the lower end is a good chunk under the estimate. So that's probably a big reason why, again, the stock is falling. Yup, it says here, share slide as chipmaker reports PC revenue slump, weak guidance, and yeah, that's why the stock is falling here. Maybe we'll do a deeper dive into this particular company and look at the earnings release. Maybe we'll do that tomorrow, but for now, guys, that's a quick little glance at what AMD reported and why the stock is falling. And you guys can see now we were about to break out of this downwards channel. In fact, we were starting to, and we were about to break the moving averages, but not quite yet, guys. It's not looking like it wants to do that. Again, we hit 92 bucks, which funny enough is right by the 180 SMA here on the 4-hour chart. We hit 92 bucks after the numbers came out. We got rejected. Now we're at 84. Now we're pretty much getting back to the bottom of this channel, which you guys can see if I pull this up on the channel tool. Let me show you guys this. We are now heading towards the bottom of that channel. I mean, just like that, we were about to break out. Now we're going to the bottom. So AMD's numbers, that's what they ended up doing. Let me see the next company here. It is Ford, guys, and I'm actually kind of scared to pull up Ford stock here, but we're going to do it anyway, of course, for the video. So let me see what they ended up doing and how the stock's reacting. Okay, so this ended up closing at 1180. It went down 2% on the day, but now after the bell, it looks like, okay, it's not doing as crazy as I thought it would be in either direction. I mean, it's down, it looks like it's down about 2%, which really isn't much at all for a company like Ford. I mean, this thing has swung way more than that during earnings season, at least from what I remember. What do you guys think? If you remember something different, let me know down below in the comments. But they did 63 cents in EPS, which beat the 41-cent estimate. That's great. And they ended up beating on sales by a wide margin. Oh my gosh, look at that. $41.5 billion in sales versus the $36 billion estimated. So they beat by a long shot over $5 billion, and they beat EPS by over 20 cents. Very, very impressive there for Ford Motor Company. And their stock chart, I mean, you guys probably know, especially if you've been watching my channel, does not look good at all. We have a descending triangle here on Ford. We have clear resistance at about $11, but at the same time, lower highs have been made over the past probably close to a year at this point. Yeah, pretty much close to a year. So at any moment now, we could fall through that point. We could go through $11, and that would be a textbook descending triangle pretty much playing out. If we fall through $11, this could maybe start going 10. Maybe it goes under that. Time will tell, guys. But Ford, they did very well EPS revenue-wise, and I'm not sure if they reported guidance. Let me see if they reported guidance here, guys. Where the heck is it? It looks like they reaffirmed their 2023 segment level EBIT, which is earnings before interest taxes, expectations of about $7 billion for Ford Blue, up modestly from last year. Okay, yada, yada, yada. Not seeing anything on revenue or on EPS guidance, but either way, the fact that we have a descending triangle, guys, that makes me a little bit nervous here moving forward with Ford stock. So the next one is every white girl's favorite, right? Starbucks, guys, SBUX. Starbucks today ended up reporting earnings after the bell, and their stock is down $5. Let me pull it up here and see. So it closed at around 114, shot to 119. Now it's at 109. Look at that. It's down around 4.3% after the bell. But talk about volatility. Holy crap. So initially, these numbers came out. It shot up 5%. Now it is down 5.5%, almost 6%, actually more like 5% after the bell. So Starbucks ended up doing, let me see here, then we'll break down the chart. They did EPS of 74 cents versus 65 cents estimated, that beat, and they also beat on revenue, $8.72 billion versus, let me see here, $8.4 billion estimated. So they crushed EPS, crushed revenue, and it looks like here Q2 comparable store sales up 11% globally, up 12% in North America, up 7% international versus consensus estimate of up 7.3% globally. So wait a second. They crushed comparable store sales globally, up 11% versus 7% estimated. They beat EPS, beat on revenue, and their stock is tanking 5%. What in the world is going on? Maybe I'm missing something. I don't know. Maybe it's it's got to be something that I'm missing. Looks like here U.S. demand surprised China rebound, lift Starbucks earnings. All right, so China is rebounding, which of course is a big market for Starbucks. Honestly, guys, maybe their stock just ran way too much. If you guys take a look here at the end of March, which was roughly a month ago, a month and a couple of days ago, this stock was at $98 and it ran all the way to $115 pretty much before earnings. That was a move of 17% before earnings heading into the report, right? So maybe it just ran too much. It's not like the earnings were bad. They were pretty good. It probably just got, like I said, too hot. And we got all the way to 120, guys, for Pete's sake. That's very overbought here after the bell. Now we're seeing a retracement. And even with this retracement, guys, down $5 after the bell, we're still above the 50 SMA or right around it, and we're still clearly in an uptrend. This could actually be a dip buy opportunity on pretty good earnings, and that's the way I'm looking at it. If this comes down, the more the merrier. As long as it holds above 100, 105, the more it comes down, the better, in my opinion. If I could get it at 105, right around the 180 SMA here, that would be one heck of a dip buy, in my opinion. So the next one that I want to go over here, guys, is Uber, and look at that. Oh man, this stock went up 11.5%. They reported in the morning, and you guys can see pretty much all the game came in the pre-market when the numbers came out. You can see this stock was at $32.50 before the numbers. It shot to about $36.50, pulled back into open to about $34.50, and this goes to show the strength of the stock. Very good news here for the bulls, guys. So again, we saw a huge pop before earnings or after earnings, whatever. Then it pulled down into open, and instead of this flushing all the way back down to where it was before earnings, bulls came in at $34.50, held a pretty nice gain. It was up at 6.5% at that point. Bulls came in, held the gain, respected that moving average, and we actually pushed through the pre-market highs. Very strong move there for the bulls, and you guys can see we ended up coasting to about $36.50 heading into close. And what do we have here on the 5-day, 5-minute? We have an ascending triangle. That means at any moment here on Uber, guys, we could be breaking out, and this could be going, even though it's pretty overbought now on the 4-hour chart. If we look at the 20-day, let's pull this up. It could arguably going, tongue twister, arguably be going up. There we go. Even more, right? That's what I'm trying to say if I can even talk today, guys. And we can kind of see, hold on a second. The past 2 days, the price action has been not the same, obviously, but pretty similar. You guys see, we got ourselves in ascending triangles 2 days ago, 2 trading days ago. That ended up breaking out. Then the next day after that, which was yesterday, Monday, we got ourselves in another ascending triangle. Boom, you see that? And of course, we broke out of that point. So this could be it's kind of looking very similar to those two setups, and it could be playing out in the same way, in the same fashion. Time will tell, guys. That is Uber, ticker symbol UBER. And let me pull the live news up and see. Let's come down a little bit more here and see what they reported, because I just realized I don't even think I mentioned the earnings, right? I'm just talking and blabbering, and I'm not talking about the numbers, guys. Hold on a second. Looks like here they did revenue of $8.82 billion, and they lost roughly 8 cents, or I guess exactly 8 cents on the quarter. And it looks like here adjusted EBITDA came in at $761 million. All right. Gross bookings up 40%. All right. That's pretty good. That's mobility gross bookings. And honestly, I'm not too concerned with the numbers here. It looks like they did beat EPS, and they did beat on revenue, $8.82 billion versus $8.72 billion. So I'm not too concerned with the numbers, because I'm mostly looking at this as a trade, right? So again, we have to watch out this ascending triangle if it plays out like it did the day before and the trading day before that. If that happens, guys, we could see a trade. It could open up for me, at least. I'm not telling you guys what to do, but that's what I'm thinking here on Uber. And if you guys have not gotten your 15 stocks yet, up to 15 stocks from Moomoo, what are you waiting for? Use that link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 stocks. And if you deposit at least $1,000, are you guys ready for this? You get 10 more stocks, totaling 15 free stocks. I'm telling you guys, it is free money, and it also helps out the channel. And if you don't like the Moomoo platform, which you might not like it, I mean, you don't like everything in life, so if you don't like the Moomoo platform, you can just simply take out your money, you keep all the free stocks, and that's it, right? You get free stocks, and it also helps out the channel. It's really a win-win, and there's no strings attached. So use that link down below. Let me know what stocks you get in the comments. And with that being said, guys, we have 3 more stocks to talk about. One is Pfizer. So let me pull up Pfizer. Of course, you guys know the big pharmaceutical company. This stock did not do that well today, right? It shot to about $40 initially when the numbers came out this morning, and then, well, it saw a nice little dump to about $39, so it dropped 3%. Then we saw a pop into the open, and right at open for the first, 15 minutes of trading. Then it ended up dumping for the rest of the day pretty much, with a little mini relief rally heading into close, like you guys can see. So they ended up reporting in the morning. Let me see here. And, I'm not a big, follower of Pfizer or any healthcare stocks for that matter. But like I mentioned yesterday, guys, this for sure, the demand for the CV vax, the vax, right? You guys know what I'm talking about. That's definitely died down. I mean, let's be honest. It was that, they made a ton of money on that 2 years ago. But now, I mean, how much money are they making? Probably a very small amount compared to what they were. And, their stock clearly is reflecting exactly that. You can see it was at $55 back in just December, right? And now it's at what, $39? And if we pull up the 3-year chart, this thing was at $61 back in 2021, guys. So as they were making a freaking ton of money, hand over fist, they were making so much money, guys. The stock went from 30 to 60, so pretty much doubled up. You got to realize from June 2020 to, when was that? December 2021, so a year and a half, guys. This stock doubled. For a stock like Pfizer, that is unheard of. And I'm not saying the company is a garbage company, it doesn't make money. That's not what I'm saying. I mean, for a slower growth company, for a pharmaceutical healthcare company, for that stock to double in 18 months, that is unheard of. And now it's getting back to its fair value, which honestly I don't know exactly where the fair value is. I haven't done a deep analysis of Pfizer myself, but it's definitely not 60. I mean, clearly the market is not giving it that price anymore. It's at 39 now, and if I had to guess, anywhere from 30 to 35 fair value could be right in that pocket. I mean, we could be getting back to that level, which again is where we were back during the 2020 era, and again it doubled up from that point. Crazy. And guys, the thing is, for this to double up again, there's no way it's going to happen in 18 months. That was a once in a lifetime for Pfizer. I mean, this thing could let's say it goes to 30, the next time it hits 60, it could be 10 years down the road. I mean, that's the type of stock this is. You can't expect this to double up again in 10 months, 12 months, 18 months, however long it took. It's going to take a long time, at least in my opinion. That's the way I'm looking at it. You got to realize, back at that time, we had so much free money. Money was everywhere, money printing, all that stuff, right? And, that's a big reason why the stock shot up. And a lot of the move came in, not even in 2020. I mean, sure, it went from $29 to 42 in 2020. That is a very big move too. But a lot of the move came in 2021. Look at the beginning of 2021. The stock was at 32 in February of 2021, and it shot all the way in 8 months. How long was that? 10 months. It shot to 61. So really, it was 10 months it took the stock to pretty much double. So yeah, guys, that's an interesting one we all have to look at, and the chart really is not looking pretty at all. And I'm just rambling here. Did I even mention the numbers? Hold on a second. Let me see what these numbers are. Looks like they did adjusted EPS of $1.23 versus the 98-cent estimate. So that beat. That's awesome. And they also ended up doing sales of $18.28 billion versus the $16.59 billion estimated. So they beat EPS and they just crushed on revenue. I mean, they did very well on revenue. But again, the demand of the you-know-what vax is dying off at this point, and that is really crushing the stock. It's obvious. And for me, guys, I'm not touching this thing with a 10-foot pole. The trend's awful, and, we have to wait and see if it reverses. Time will tell. I don't know, and I'm not banking on it anytime soon. So the next company I want to go over is Caesars Entertainment, which today went down 4% after, I believe they reported. Actually, no, they were after the bell. Let me see here. So they went down 4% on the day and down even more initially after the bell. The stock went to 43, and now you guys can see it is rebounding a bit to about $45 per share. So let me pull the live news up and see what they did. They did EPS of negative 62 or 63 cents. I'm not sure what the estimate was on that. It's not saying it here. I don't know why. And sales came in at $2.83 billion versus $2.76 billion estimated. So they beat on sales. Again, the EPS estimate's not showing, but that's pretty good that they beat on sales. And it looks like here we're not seeing anything on guidance, but if I pull the 4-hour chart up, guys, this chart does not look that great either. I'm not going to lie. I mean, Pfizer's definitely worse, but this one's not too far behind Pfizer. I mean, if I pull the chart up here and show you all, we have a clear head and shoulders. We have the left shoulder right here, the head. We have the right shoulder, boom. And now we're actually getting rejected by the 180 SMA. I'm not sure if you guys can see that here on the 4-hour chart, which means at any moment now, we could be setting up for a dump. That right shoulder could start completing. Maybe we go to 30, 35. I don't know. I mean, this is getting nutty. So by the looks of it, guys, Caesars, yes, they did all right on earnings. Stock's down a little bit. I'm going to avoid it for now. We'll see how it goes. I could be wrong, but I'm going to avoid it for now as, again, we have that head and shoulders playing out, and it could get worse. So the last stock for the video, and by the way, if you guys stuck till the end, let me know in the comments, say stuck till the end, or drop money emoji or something, and hit that like button. If you haven't hit that like button yet, hit that juicy old like button. Let's try and get this video to at least 100 likes. Can we do that? Hit that like button. And the last one is Marriott, which is actually doing very well. Today it went up about 5%. It's completely breaking out, although it is pretty overbought here. It is breaking out on the 4-hour chart. We're above the moving averages. We have a golden cross. And now with today's move, guys, believe it or not, let me actually clear the drawing set. We took the highs out, and it's actually not that hard to believe considering how well the stock's been doing. But look, we took the highs out from the end of April and from back in the beginning of March. If I actually extend my line here, you guys will be able to see it. Boom, we took that high out, and now the next main resistance coming up is $182, which was the high from back in the middle of February. So I think it's overbought, like I said. So maybe we consolidate a little bit, chop around 175-ish, and at that point, maybe we make another move towards 180, 182. That's kind of what I'm looking at here from a technical perspective. And we also have a cup and handle, arguably. You guys got to realize that as well. So let me see, what did they do? They did adjusted EPS of 209, which beat the 184 estimate, so that's great. And they beat on sales as well, $5.62 billion versus $5.41 billion estimated. So they beat EPS, beat on revenue, and let me see here. They added about 11,000 rooms globally in Q1. They did adjusted EPS, again, 209, which compared to last year's 125, that's great growth there in adjusted EPS. And it looks like here FactSet consensus was 1.85 billion, I guess, or actually no, that was for EPS. Never mind. But yeah, either way, guys, Marriott, pretty decent earnings there. And again, I like the way this is setting up. Probably one of the better setups from this video. So let's see what happens here above 175. I think we'll chop a little bit here, and then maybe we go to 182. Maybe we even break 182. Time will tell, guys. So with that being said, I'm going to wrap up the video. If you enjoyed enjoyed it, hit the like button, subscribe, and don't forget to get up to 15 stocks for Moomoo. Link down below. Open up an account. You get 1 free share of stock right off the bat. If you deposit at least $100, you get 4 more stocks, totaling 5 free stocks. And if you deposit at least $1,000, guys, you get 10 more stocks, totaling 15 free stocks. And of course, all those links down below help out the channel, guys. And of course, I appreciate you guys as always. And with that being said, cheers. I'll catch you in the next video.